Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monte, Chief Technical Analyst with Sticky Trades, and we're coming into the final 2 minutes of today's trading session on this Wednesday, January 31st, the last trading day of the first month of the year. And if you recall from last Friday's report, I was questioning whether or not we would be able to hit my upside target there at 385.23. However, as it turned out, we did just that. We hit that target. And if you look right now, as again, we're coming into the final minute of the day, we're going to close with a bearish engulfing on higher volume. In addition to that, look down below, we have a cross of the CCI sell signal right there. So like I did last week, I'm going to draw a downside target for the rest of the week here. So I do believe that we're going to start moving lower on the diamonds at 380.46 is my target towards the end of this week, possibly into Monday. So keep an eye on that. If we look at IWM, we are pulling back exactly as I said we would. We're not that far away from hitting that downside target of 191.58. I think we could very well do that by Friday. Look down below. We're just about to cross below the zero line. That's the momentum line. And there we go. There's the close of the market. And that zero line, once it's crossed, we generally get 2 to 4 more days of downside pressure. So IWM is still being controlled by the bears right now. Taking a look at QQQ, this was pretty amazing because this was a 4-part forecast, if you recall. Part 1 was that we'd hit my upside target. We did that. Then I said, number 2, we would look for a drop in volume. Upon that drop in volume, we would get a pivot lower on the CCI. That was forecast number 3. And we are waiting to get that downside target hit. That would complete a 4-part forecast, which, by the way, no one in the world will do except here at Sticky Trades. We're not afraid to go out and put our necks on the line to make these forecasts for you. So my downside target on QQQ is 409.53, still in place. That brings us to SPY. Take a look. This was another 2-part forecast. Upside target was hit. We're on our way to hitting that downside target of 479.14. There is almost no shadow on the bottom of that candle, and we have higher volume. In addition to that, the stochastic is crossing with a sell signal. Right there, as I magnify that, you can see the blue crossing below the red. We do have a sell signal right there on the CCI. And again, like what we saw in the Qs, that momentum line is about to be crossed, which gives us another 2 to 4 days to the downside. So that downside target by Friday is still in place at 479.14. Now, finally, let's take a look at the VIX. This is the leading indicator that is also known as the fear index. And you can see that fear is creeping into the market. We hit my upside target there at 1410. I think I misquoted that and called that 1411, but either way, we hit that target. We have the cross on the stochastic going higher. I'm going to extend this in an upward direction here. And I think we're going to break out of the high that we saw on Monday. So I'm going a little bit higher on the VIX to 1548. That is a new target line that will most likely be in place by Friday. And we'll have to see if we break out over that high. I might go so far and forecast the $18.11 target that is being represented here in that dotted line. Now remember, I follow a 7-point trading checklist. We're in the process of developing a video that goes along with this trading checklist. So if you're interested in getting a copy, just visit us at stickytrades.com and we'll be sure to help you. And also tonight from 6 to 7 p.m., we're doing our rapid fire stock analysis session. That's where I'm going to go over 50 stocks in 60 minutes. Our percentage of accuracy with regard to the hit rate is 83%. We have documentation and third-party verification to prove those numbers over a 2-year period. No one in the world is hitting 83% consistently. Those targets, by the way, generally hit within 66 trading days. Now, while you might be impressed with an 83% hit rate, you have to also know that 17% of the time the targets do not hit within 66 trading days. So you have to manage risk, but with 83%, along with managing risk, you're surely putting the odds in your favor. Stick with us. We won't steer you wrong, and I'm looking forward to speaking with you tonight from 6 to 7. So long.